guest. For those of you who have been with us on this crusade, this voyage of total economic empowerment, there's some things happening that you should be completely made aware of, and you control your own personal financial narrative. The industry is thriving. This information is readily available, and we've come together as a collective conscious to ensure that 1 million families become impacted and financially educated. So, for those of you that are our guests tonight, for the very first time, I want you to drop a 111 in the chat. If this is your very first time here with us this evening, I want you to drop a 111 in the chat. And for those of you who are still learning the strategy and perfecting your skill set of cashing out, I need you to drop a 222 in the chat. Yes, for our new guest, this is your first experience, 111s. And for those of you who are still learning how to cash out, I want you to drop a 222 in the chat. So before we get started, I'm going to turn the call over to the trade whisperer, who's going to very give you some pertinent information. But there's some things happening for those of you as a word of encouragement. I want you to appreciate where you are right now. There are a lot of things happening behind the scenes as we see the evolution of adding the legitimacy and the authenticity of the cryptocurrency market. Something happened very unique today. You need to be made aware of this. The CEO of Visa is now in the process of creating an infrastructure and partnering up where Visa will now be implementing it and being able to now be involved in the middle of the transactions of cryptocurrency. Yes, folks, obviously, Visa and MasterCard, they're the number one processors for all transactions, whether it's credit card, debit card based. But the mere fact that Visa is now about to be in the middle of the transactions, you should be extremely excited about knowing that the skill set, be your own bank, the movement that we're taking place. This is amazing to know that, and our whole purpose is to make sure that this information is no longer hidden in plain sight. And then, yes, for those of you who are involved to understand, I'm going to help you tonight, really, for those of you who realize that you may have some reluctancy of wanting to expose and share this information to people before we get started. And I want to help you understand how important it is to understand wealth creation, and words mean everything. So there's a gentleman that many of us are familiar with, who today, I think it's coming this June, he's going to be stepping down as CEO of one of the most profitable companies over the last 7 years. As a matter of fact, uh, how do you create wealth? You create wealth by making sure your money is working for you. And secondly, you create wealth by understanding, creating profit centers and distribution. So if you did not know, right, for those of you who may have an indifference toward the industry of direct sales network marketing, I want to help you understand the most profitable, and I'm going to use this word so you'll understand the most profitable network marketing company on the planet. Does anybody know? Can tell me the number one network marketing company on the planet? The number one network marketing on the planet. You drop it in the chat, or you can just uh, yeah. Someone has been reading my email. Yes, it is Amazon. It is Amazon. It is Amazon. And how did Amazon accomplish that? Listen to this. Jeff Bezos, words mean everything, right? So his phraseology is retail sellers. Lesson, retail sellers, just simply network marketing. 74% of Amazon's revenue came from retail sellers and third-party vendors. So yes, that is a wealth equation. So what does I Am Dot Academy have done effectively? We've put you in a position where you can learn the skill set of making sure that your money is working for you, and then adding to that, creating profit centers and distribution. So I want to give you a word of encouragement to let you know that, yes, that's how wealth is created. There's a reason why 74% of Amazon's revenue came from retail sellers and third party vendors. So, what do you have the opportunity to do? You have the opportunity to leverage this platform, expose your friend, neighbors, and relatives to this information, and you too will be the next Jeff Bezos. So that's food for thought. So with that being said, ladies and gentlemen, I get the opportunity and privilege to present to some and introduce to others the trade whisperer self. Guess what? Ms. Tasha M. Dyer, a retired major from the United States Army, MBA recipient, licensed financial advisor, the creator of the BYOB Cashout strategy, and also a newly published author. So with that being said, grab your pen and paper so we can sit at the feet of one of the greatest financial minds in the universe, Ms. Tasha M. Dyer. Ms. Dyer, are you on the line?
Absolutely, absolutely, I am. Ladies and gentlemen, welcome, 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 welcome to BYOB Market Talks. Now, if you have just joined us, since our visionary has been talking, first and foremost, let me just tell him thank you so much for opening this call, because the information that he just dropped, I mean, think about it. His background is in investment banking, and I'm talking about just someone who understands the market, the financial markets, just in its totality. Now, you actually, if you missed the beginning of this call, you are going to have to go back and catch the recording. You know, I definitely am excited to be in business and in partnership with you, Mr. Rogers, my coach, my mentor. But ladies and gentlemen, let's just think about what he just shared with us. I'm telling you, if you missed it, you're going to have to go back and listen to it again, because I mean, it's just powerful. Now you understand why we were so excited to offer and present to you all the e-coaching program. Now you understand the magnitude behind that, because you should be in a position where wealth comes to you and where you really leveraging that and you understand that. So I'm excited. Now, if you're excited, drop a 555 in the chat. Let me get a 555 in the chat if you are excited about the information that he just shared with you. And I'm just going to go ahead and tell you our website, beyourownbankmovement.com. I need you to go there and get registered for the e-coaching program, because that is going to help you facilitate each and every last thing that he just dropped with you. I mean, I don't know. It's an evolution is right now that you really have your hands on. It is an evolution of currency. That is what's transpiring and manifesting right now. This is something that you must be a part of. You know, we will not miss this movement. As my daughter said, if you see her videos, she always say, do not miss the movement. And I'm telling you right now in my Deja D voice, do not miss the movement. Do not. So make sure that you do not miss the movement. You need to be in front of it. So let's go ahead and see who is on the line this evening, because this is BYOB Market Talks. This is BYOB Basics. We are basic training. We're going to break it down. And I love when the market speaks to us, when the market talks to us, because that is what we're walking through right now. So I'm not going to go through everybody on here, but I definitely see BYOB worldwide. I definitely do. And so, you know, from all, I mean, we have Chicago, California, Jacksonville, and across the seas. So I'm just excited to be on the line with you all this evening. So now, and of course, I cannot leave out Louisiana. Come on, New Orleans. You know, I'm from Baton Rouge. So we have to acknowledge, you know, the boot state. So now, as we come through here, let me officially welcome each and every last one of you all that are on here this evening for the first time. Let me welcome you, and let me welcome each and every last one of you back. You know, let me welcome you all and welcome you back. So let me really help you understand and break this down, how these calls work, okay? And you're going to be able to appreciate that a lot more. So let me really break this down for you. The evening calls, okay, tonight and Thursday night, these calls are designed to really help you understand the BYOB cash out strategy, as well as understanding how to utilize the tools. So tonight is BYOB basics, and Thursday night is how to use the tools. In the morning, on the morning calls, Monday through Thursday, 5 a.m. and 9 a.m., we're live in the market with you. Now, it's all about trading style and it's all about personality, but we help you develop that because you're not hand-fed. What we do is we walk you through the market. And I can guarantee you, for those of you all who have been operating under that mindset and learning how to be the signal, do you see what your affirmations are? I am the signal. So when you really understand that, you understand that you rather learn how to fish instead of someone fishing for you. And you understand how to navigate the markets. And so up front, yes, you're going to have to learn it. But in the long run, you're going to have a skill set that no one can take away from you. You have a skill set that is definitely going to empower you. And so with that being said, let's go ahead and dive in here this evening. Now, let's just go ahead and dive in. So as we dive in, let me share my screen with you. And as I share my screen with you right now, what I have on here is our 2 trades from this morning. Now, of course, we looked at other ones, but these 2 trades are definitely, these 2 currency pairs, these trades are definitely the currency pairs that we went over. These are the currency pairs where we made a decision. And so that's ultimately what I'm going to use this evening. And I'm going to use this because I want you to understand why it's so important for you to be the signal. Why is it so important? Now, I was excited this morning, you know, because we actually had an opportunity to where, you know, we got to analyze some live trades and not just look for setups, right? That's actually what we were able to do. We actually got to look for live trades and not just setups. And so as I look at this, let's go ahead and analyze for just a moment. So we were looking at GBP USD, and then we were also looking at GBP NZD. And so as I walk through the strategy, what I'm going to do, you know, what I'm going to do right here is I'm going to walk through this last trade. You see, we went off into a beautiful sell, beautiful sell. And so we're going to get the basic fundamentals of the strategy. And now this is also interactive. Interactive means drop it in the chat. So this is definitely interactive. And so if you have questions, comments, you know, this is your night to learn. Don't hold them back, ask the questions. Now, of course, if there is something that you can grasp out of the academy, I am going to redirect you that way, certain videos, certain things like that. However, tonight is the night that I really want you all to understand the BYOB cash out, and that's where we're going to start. Now, understand, here we go, all right? BYOB cash out strategy, 2 indicators, okay? 2 indicators. And the 3 indicators. I'm looking at the 2 at the top. 2 are lagging, 1 is leading. That's where my mind was, and I'm saying something different. So you have 3 indicators, 2 which are lagging, 1 that is leading, okay? There's a mixture. You never want to be in a position where everything is lagging or everything is leading. All right, you want that combination. But what makes this so special and what makes this work the way that it does is because when you're in the academy, you get enrolled into the academy, one of the things that you learn is price action, basic price action trading. We're not walking away from that. We definitely understand price action, understand how to move the market, but there are things in there that really help you. There are 3 areas of value, and those areas of value really help you understand where the market is going and what how the market's moving. Now, what is in my areas of value? My areas of value are my trends, my support and resistance lines, and of course, my moving average. Now, as I'm looking at that, right, as I'm looking at those things, one of the things that we're doing, so right here, I have my stochastic, my Hikanashi candles, and my PSAR, okay? My stochastic, my Hikanashi candles, and my PSAR. These actually equate to my areas of value, okay? Those are my areas of value. And so what you want to do is understand how to use them. So this is my leading indicator. These are my lagging indicators, all right? This is my leading indicator. These are my lagging indicators. And understanding that, this is where it begins. Now, I'm trying to drive that home because of the trades we took this morning, okay? Now, and I'm saying that because I'm just like you, okay? All of us are the same. So we look at this, okay? We look at this, and when we look at this, we see this and we say, you know what? My eyes automatically jump to the candles. Even though the PSAR is right there, automatically we're gonna look at those candles. That's okay. This is where your discipline comes in. You need to come down here and look and see what my stochastic is doing. Because as I'm looking at this, okay, like if we were gonna come analyze the charts, we'd be looking at this candle, but then I need to come down here and in my mind, I have to know that my stochastic is my leading indicator, all right? My stochastic is my leading indicator. Now, here we go. Blue line cross over the red in a downward momentum. Blue line cross over the red in an upward momentum. This downward momentum happens around the 80. This upward momentum happens around the 20. Now, yes, I'm aware that sometimes when we're trading and the vibrato calls the trades or it's the alerts, and you know, or we look at the harmonic scanner and pull it back, we look at the bounce back and pull it back, we look at other tools and bring it back over here, you know, yes, I'm completely aware that that, you know, it's not going to always be here. Okay, I'm completely aware of that. But what I want you all to do is get in the habit. If you are a 111, new to trading or just new to BYOB cash out strategy, you know, you want to begin focusing here. And there are levels to advancing your skill set. Just like as we began school, you know, you start learning and then you begin adding to it. So this is no different. How you do one thing is how you do everything, you know, so you begin with the basics and then you begin to add to it. And so you enhance and develop your skill set, you know, like I'm going to talk to you about 10 pips and cash out. And then of course you develop and you add to that. So now here we are. I'm around this 80. Blue line cross over the red and a downward momentum. That's around the 80. So that means I'm looking for a sell. Now, when it happens here, that blue line cross over the red and upward momentum, all right, that's around that 20. I'm looking for a buy. Now, as we, and I'm gonna mark this chart up as we go through this. So now, if I was to begin looking at this chart right here, my leading indicator, once again, you see I'm around the 20, and this is where I need for you all to like really pay attention to these things, because this blue line cross over the red but it's going downward. It's a blue line cross over the red and a downward momentum, but I'm around the 20. I'm around the 20. So around the 20, I'd be looking for a buy. So what does this tell you? That tells you that my sell is not complete, right? That's what that tells you. That tells you that my sell is not complete. And that this can actually go down to 0, or it can get to a point where it start riding sideways, because on the higher time frames, there's a push or there's more momentum that's going to take you in another direction. And so one thing I need you to know, we begin on a 15 for a particular reason. However, the higher time frames is what moves the market. The lower time frames is what, you know, all the activity and the actual price of the market at that time. So because, and I'll show you what I mean by that. Let me jump here really, really quickly. Now, I want you to pay attention to where this price is at, where this candle is at. It's right here at this price, right? When I come up here to the higher time frame, let me come back down here. So if this one, it better. All right, so this is where that price is. And this might not be because it's a strong downward, you know, hold on, let me see. It's actually a nice push on this sell. So I'm gonna put this right here at that price where we're at. All right, and then we come to the higher time frames. You notice now this, you know, a lot of times it's a larger gap. And so you notice that this is where the price is actually at on the lower time frame. On a higher time frame, it looks like a wick. So you want to be this. So this is where that price actually is. And so we'll dive into that a lot more on this coming Thursday, but I just wanted to point that out for you right now, because that's why, once again, a lot of the triggers happen on the 5 minute. The 5 minute, the 15 minute, the lower time frames is all the activity. The higher time frames is where the market is going. So let's continue. So now we know that what we're looking for. So as I'm looking at this, let me come back up here to my 15. And as I'm looking at this, okay, as I'm looking at this blue line crossed over the red and downward momentum. So we can all agree that that's my first step. That's the first thing I'm looking for. And so I'm actually beginning to look for a sell. My eyes are honing in to a sell. I should be looking for a sell, right? A sell setup. So what I'm going to do is I'm gonna put this vertical line right here, all right? So, and actually I can move it over just a little bit. So when I put this vertical line here, regardless if I put it here when it actually really broke through, because it retested it a little bit, I can put it here. What you're seeing is This in itself, blue line cross over the red and down. I'm gonna actually move it over just a little bit so I can be at that. I like it when it opened up a little bit. So that blue line cross over the red and the downward momentum, okay? Now what I'm looking for, is the rest of the candles. And I'm pointing this out because when we do our time frame confluence, I'm gonna tell you it needs to look like it's setting up for a sell. So right now you wouldn't take that for a sell. I have a red candle and I don't have a PSAR. So if I make this any bigger, okay, if I make this any bigger, and you see that's actually what it would look like, and all to the side of that, it would be space and opportunity. You will see nothing but a black screen on the right side of that. So we don't know where the candles are going right now. All you know, and now we're actually gonna move it over just a little bit because when we get right there, you can see that it was kind of going sideways. So as we're looking at this candle right here, as we're looking at this space in this area right here, you see that I'm now in that blue line cross over the red. However, if I look at my candles, I have a red candle, but I don't believe it's flat. We put the horizontal line through it right now. I think it has a wick. Regardless, we don't have a PSAR. So it's not ready. That trade is not ready. So that's what looks like me. It's the same thought process and the same concept from the 15-minute chart. It needs to look like it's setting up. Right now, this looks like it's setting up for a sell. And so when we actually get to the sell, we're here. Okay, you see we have a red candle with a flat top and a PSAR flip. This is pretty weak. I'm not gonna lie to you. This is pretty weak. So, you know, but we need to do our time frame confluence. Let me explain to you why time frame confluence is so important. All right. Yes, we back tested the strategy. Very happy about that. For an entire year, we ran it for an entire year. And when we ran it on everything. Currencies, indices, commodities, you know, cryptocurrency, we ran it on everything. 92% was the lowest accuracy rate that we were able to accomplish. However, I added time frame confluence to this because of the simple fact that when we look at this and when you understand that, we all have what's called a pip reaction time. I can look at this. How long does it take you to, do you know how many pips it takes you to get into a trade? Have you really ever thought about that? You know, I'm going for 10 pips. What about your broker spread? You know that this is a platform. So you know that this is a platform, right? It's a platform. And understanding that this is a platform that is an educational platform, that means that it's not tied to any brokers. Yes, when I look at it, there are different brokers that feed it because you have to have a feed coming from somewhere. However, understanding that and understanding that I need to account for all of that. So time frame confluence really helps you account for you and your broker because all of us don't operate on the same level. All of us don't react the same. All of us, some of us are quick and we're on it, and some of us take a little bit longer. This is why that time frame confluence is so important. Make sure you have all of the indicators, and then also make sure you use your time frame confluence. So now let's do time frame confluence. You need the 5-minute and you need the 1 hour because I'm trading on the 15. This is where I begin. And of course, when we get to Thursday, I'll talk to you about market structure and all of those different things that's going to help you, you know, taking those trades off the vibrato in the 5-minute, all of those things that are going to help you. We'll continue that from last Thursday and the Thursday before last. But right now, you need to be thinking about time frame confluence. So from the 15-minute chart, I need to check the hour and the 5. The hour is understanding where the market is, and the 5-minute is understanding the activity that's happening, that entry point. And I just showed you why, because that is where the actual price is. So we always drop down to get that tighter entry to understand all the activity and understand what the market's doing, because a higher time frame is the direction. So now, if I'm looking at this, let's go ahead and check my hour. Now you can check the hour or the 5-minute first. It does not matter. We just need to check one of them. So when I'm here, this needs to look like it's going into a sell. We just talked about what look like means. And so this needs to look like it's going into a sell. And so this looks like it's going into a sell. So we definitely have a red candle. My stochastic, hear me, stochastic, hear me, stochastic, hear me, stochastic also. Price and oscillator also need to have some confluence. So think about it. if I'm here on the 15-minute chart, then you notice I said blue line crossing over the red and downward momentum, red candle with a flat top, red candle with a flat top, red candle, blue line crossing over the red and a downward momentum. That is confluence in itself on the same time frame. So my price, this is my price, this is my oscillator. My price is the trend of my price is in an overall sell. This is in a sell. You see I have confluence on this time frame. I need confluence on this time frame, because if this is in a buy, like right here, let's say this candle was red. If this was in a buy and this is in a sell, don't touch it. It's not speaking the same language, right? So we don't want to deal with it. Now, when I drop down to my 5-minute, it needs to still be selling. Now, I'm not gonna lie, this was kind of ugly, you know, but it's still selling. And I love that. It does not get any better than BYOB, best strategy out there. Love it, love it, love it. So now, so we can see now, of course, you can do your market orders. Since we've done that training, that's why I just referenced for you to go back to it. Since we've done that training, I cannot tell you how many people have been so excited to be able to use those buy stops and sell stops. That is going to help you with those trades. It's going to help you with this, because if I had a sell stop down here, you know, then guess what? You analyze it, set it, you know it's coming, and voila, you take the trade. And now that's also going to help with your pip reaction time. So now, how do I take my profit? Okay, how do I take my profit? 10 pips and cash out, or to your support and resistance line. So 10 pips, do a market execution as you're developing, okay, let's say developing. Developing means I'm still learning support and resistance. I'm still learning my market orders. You know, do your market execution and just take the trade. Modify and put in your take profit and your stop loss. I'm telling you that because that is going to impact your time frame. Not your time frame confluence. That's going to impact your pip reaction time. If you're sitting there trying to hit, get in the market, let me count my 10 pips, let me put this in right now, and let me come up here and look up here for my stop loss, guess what? You are affecting your pip reaction time. You say it helps greatly. Yes, you are affecting your pip reaction time. So instead of entering the trade here, let's say your pip reaction time lets you enter right here. Instead of entering it here, by the time you do all that, you enter the trade way down here. You see the difference? So just go back and modify. Just go back and modify. I mean, you are literally, because this was a 15-minute candle and this dropped. Look how much this dropped in one 15-minute candle. So you don't know. Let's look at that one. All right. So look at, this is a 5-minute candle. So look at this drop in 5 minutes. So you sitting there doing all those calculations within this 5-minute candles. Look at all that drop. That's like 50 pips right there, just in that drop. So if I come down to the 1 minute, so we know you in that 1 minute range doing all those calculations. So look at this in this 1 minute range. Look at that amount of pips that surpass. So if I'm here or there, let's just look at both of them. So that one is 40 something. And then I come over here to this one, and this one is 30 something. You already had take profit. And those are 1 minute candles. So that means every candle is 1 minute. So I just want you guys to really, really understand that. So with that right now, questions, comments, testimonies before we analyze this morning's, because I want to take that and show you what we did this morning. Questions, you taking a trade. You taking a trade right now while we analyzing it. I love it. I love it. So no questions. I did say questions, comments, testimonies, 777 in the chat. So awesome. All right, no questions, comments. So let's go ahead and look at what transpired this morning. So I'm gonna stay on this one first, okay? I'm going to stay on this one first. So around here, I had to put it here. So around here. Now, as I'm looking at this, okay, you guys already know I've always liked GBP, so it doesn't even matter. So I just like the market, let me put it that way. So as I'm looking at this right here, and you can see blue line cross over the red and upper momentum. All right. And you have this green candle with a flat bottom, PSAR flip to the bottom. Let's go ahead and look at this hour. When we looked at the hour, look at this. Now, I'm going to tell you, if you guys were on the call this morning, you know, let me check this 5-minute real quick. You know, and I had to restart my computer so I don't have, you know, it exactly like what we were looking at. So this wasn't a buy. So you know that these did not align. And of course, remember I've told you the reason why I love this morning so much is that when you go back and look at it, okay, when you go back, this was not pulling up right here. This was definitely not pulling up right here. So we didn't take the trade when we saw it because it was not pulling up at this moment. The stochastic was not when we checked our time frame confluence. And so that was a trade that I made a decision that I was going to pass on at that moment. Now, this is GBP, and I'm going to tell you, GBP, NZD, GBP, JPY, they have a lot of pips in them, okay? But this is where your trade plan must come into place, okay? This is where your trade plan is important because it has a lot of pips in it, but it also, that means it has a lot of pips. If you're trying to force a trade, it has a lot of pips to take profit, but it also has a lot of pips that'll work toward the PSAR for your stop loss. So look at this, okay? You see that? That's 21 pips basically from the stop loss, plus you have to add where you entered the trade. So it's so important, right? You always want your profit to outweigh your stop loss. Remember I said 92%. That means there's an 8% in there, all right? And if you do what I'm telling you, then your profit margin is going to increase from a 92%. I know we have individuals that's literally trading at 99% and 98% because they're operating under discipline and patience, okay? It's so important. So yes, you might get a 777 here. That's wonderful, works out, right? But look how fast this thing turned around, okay? And as soon as it's turned around, let's say you push the issue, you got into it, you know, whatever. Some of you all, half of you all got a 777. Some of you all have a slower pip reaction time. And then you turn around and now this is pulling down and it's pulling down. And look, where's your stop loss? Right below the PSAR, not on the PSAR, but below it. And what happened? You wicked out. We never would have come back up here. It didn't even come back up as high. And then look at these strong sales that we just analyzed. So, I mean, and then of course, you know, and of course you want to make sure that you have a stop loss, because if you didn't, what would you be right now? You would be 120 some pips in a hole. Talking about the market's going to turn around. No, 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 no. And so, but this is why this is so important. You know, you say that's where you've gotten stuck. We want to change that, but this is why this is so important. Allow it to play out. Allow it to be, if it's not there, you know, you guys heard me this morning. I saw 777s on GBP USD. I was like, I'm not taking a trade. It does not, everything is not in alignment. And if it's not in alignment, you have to get to that point of discipline. And if you're at that point of discipline, you'll be sitting there where the only reason that, I think, we had gone about, you know, this is when everything was hitting on a 5 a.m. call. We were hitting at, you know, oh my goodness, it was like 3 or 4 months where we were taking all those trades in the morning, and then all of a sudden we hit a stop loss. So we went together collectively 3 to 4 months with not one stop loss. I mean, not one. And then of course it was a CHF pair, and you know, the rest is history. So so here we go. And so that's ultimately what it is. And so you want that discipline. And so when this thing played out, now you can see, yes, but this is, let me show you back on the confluence. This is what I was trying to show you guys. So now you will see that when these things happen right here, this morning we had this circled up, we had all of this right here. And what did I tell you guys before? You know, because you hear me on these calls, you'll hear me say, you know, it kind of went back, it didn't, you know, you'll hear certain things, right? You'll hear me say like, it might have looked like this and it might not have looked like that. It might have looked like this and it might not have looked like that. Well, the reality is right here, this one we know was not pointed up this morning. And so we analyze it so I can honestly sit here and tell you that. But now if I'm going back in history, you know, this looks like it, because imagine these are two strings, okay? Just imagine they're two strings. As the market pulls this, you know, can you move a string without it moving at all? So can I really move a string? If I have my hand on a string, you ever try to move and for it not to move, it's going to move a little bit. So that's why this moved a little bit. So it wasn't there this morning, but now as we're looking back at history, so I can tell you, because we looked at it, that it wasn't there. And that's why I didn't take this one, but this one was okay to take. Now, let's come over here to this one. Okay, let's come to this one. Now, same thing, same thing. So are you guys, before I even come here, questions, comments, testimonies? Because I want to slow down. I want to make sure you guys are with me. I mean, I enjoyed this morning's call. I don't know about you, but I did. Questions, comments, testimonies. All right, so no questions, no comments, no testimonies. All right.
Can you go back on?
Drop it in the chat, drop it in the chat. But since you're already unmuted, what were you saying? Make sure you all drop it in the chat. Can I go back to where?
My bad. How you were saying about modifying the ratio of the pips and stuff, like you were saying something about how you could tell how many pips you were getting at a certain time and stuff.
Okay, you talking about when I run this over here?
Yeah, okay.
Yeah. So let me go ahead, let me break that down. Now, I'm a kind of a old school type teacher where I want you to do the legwork first. You know, where, you know, when let's think back in math school where, you know, they tell you that, okay, how do you count the pips? How do you do that? You know, I want you to manually do it. Like for me, I want you all, if you've ever had a conversation with me, anybody's ever had some training with me, I'm like, where did you enter the trade? Look at your MetaTrader 4. Tell me where you entered the trade. Calculate your pips. If you are selling, then of course I'm you know, if I'm selling, then of course I'm subtracting. If I'm buying, of course I'm adding, because your pips run along the side over here, right? And where's my stuff at? Can't never find it. So my pips run here. So if I'm buying, they're going to increase, right? And I like for you guys to know how to count these. If I'm selling, they're going to come this way and you're going to decrease. So selling, I subtract. Buying, I add. And so, but there is a ruler. So you don't want to sit over here and guesstimate. And I've seen this, and that's why I'm going into detail like this. So you can take this ruler and you can run it over here. And it'll tell you, you know, how many pips this covered. So you look at that, it says 87.7. So it covered about 87 pips. And so you can definitely see where it does that. However, I want you to be able to calculate it. I want you to be able to add it, not try to sit here and go, okay, well, where's my 10 pips? Okay, this is where we entered. I'm gonna come, and then over here, like, okay, let me look over here at the price, and now this is my stop. You know, this is my take profit. So most definitely. So that's that. But yes, that ruler will give you an understanding of what it's already covered as well. So you say you learned a lot this morning, especially how important patience is and not to trade with my emotion. See, I enjoyed it too. I really did. And so because I'm telling you that, and I'm so glad you're saying that, because I'm telling you, we'll attempt to take those trades and then we'll feel like we missed it. Oh, I missed that trade. Guess what? The market is open 24 hours, 5 days a week. You did not miss anything. You guys saw I didn't take the trade. I did not take this one. I trade with you all. I did not take this trade. And that's okay. Some people 777. But you see how GBP NZD was buying and then it turned around and sold, and it's now 124 pips in the sell. So that would not have worked out in your favor. Some of you did because you have that quick pip reaction time, but that would not have worked out in your favor. This one would have worked out in your favor. I'm not willing to operate in a toss-up like that. I don't gamble. You know, I don't gamble. This is very strategic, and it is definitely a skill set. I do not play the lottery. I'm not playing on those slot machines. I'm not gambling. I like keeping my money. And so you should have an expectancy that, you know, you should definitely have an expectancy that, you know what, guess what? I expect to win. That's why that's your affirmation. All my trades end in profit. I expect my trades to end in profit. And so when I analyze a chart, if I have any emotion, that's what my emotion is. I expect my trades to end in profit. And us analyzing it is not pushing a button and then saying, go, 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 go. Come on, come on, come on. You know, oh, Father God, Jesus, please, please, please. That's not an analyzation, right? No, that's not how it works. So what you want to do is analyze it, okay? You want to analyze it. And so here we go, because God gave you the skill set. So it's not to do it and then be like, please fix it, you know? So here we go. The blue line cross over the red and a downward momentum. And so here we go. We have that red candle with that flat top and then that PSR flip. So this is literally that setup. And so then when we come here and we check this hour, all right, hopefully this one is still showing. It doesn't look like it. You got, okay, I know you guys can co-sign with me because you were on the call with me this morning. We did not have confluence at the time. And so when I come down to my hour, so this is lovely about that looking back. So when I come down to my 5 minute, my 5 minute needs to still be selling. So we had it marked up. I hate the fact that, you know, I had to restart, you know, and I lost my markup, but either here nor there, it doesn't matter. The reality is when we were looking at this, we did not have it, you know, you guys can kind of see it where you see how this has started pulling back up, and that's what we were. We did not have confluence, okay? We didn't. And so, let's see, we did not have confluence this morning. And so what ultimately happened is, so how can I hear you all the way from Ohio? I love it. So what ultimately happened is, you know, I want to say it might have been back here. I might have my time off. So I want to say, let me put this right here. Let me see, just to make sure I have my time off just a minute, because I tried to make sure I put it on the right thing. Okay, let's look at this one. Let's look at this one because it's the same thing. So, all right, so you can see right here, you know, this is around, okay, so I was like, did I have my time off? So, okay, we playing musical mics again. Let's make sure we keep our mics muted. So as we're looking here, you can see, so blue line cross over the red, downward momentum, red candle, flat top, PSR flip to the top. Come here to my hour. When I come here to my hour, okay, I come here to my hour. So, right, no confluence, so I stayed out. Exactly, so you already know where I'm going. And that's why I said I think I had the time off. So this was turning red, absolutely, this was turning a little bit red. But look at what my stochastic is doing. So this is where we are. This is it right here. So look at what my stochastic is doing. You know, my stochastic down here is still in a buy. This is what I'm trying to show you all. So I don't have confluence on my price and my oscillator. I just don't. Even on that next one, we really didn't have it just yet. So I don't have confluence on my price and my oscillator. So this is still in it's an hour. So this is still in a buy. So looking here at this 15 minute, all right. So yes, it looks beautiful right here. Oh my gosh, it looks beautiful. Now, this is what I want to tell you guys about using that 30 minute. Because I know some of you are like, well, I'll use the 30 minute. I taught you the 30 minute. So, but I still need to have some indication that it looks like this was pointed straight up. It was like straight up in a buy. And this candle is real flimsy. You know, look at this candle. So yes, it's definitely, this was in a buy. This is definitely was moving upward. And then it's very obvious the pullback. But how do you know if it's a pullback, or how do you know if it's a correction to this, or how do you know that this is in a pullback? Now, unless you're trading on the higher time frames, we have to analyze here on this 15 minute. So, right, this is the hour. Correct, this is the hour. I'm on my confluence. And so, you know, this is what we're looking at. So here, you see that's pointed up, and here, you know, it's starting to look like, but my confluence is still in a buy. So how do I know that the market is going to shift? Remember, the higher time frames give me the direction of the market. All right. So then when we go down to the 5 minute, we get down to the 5 minute. And of course, when we get down to the 5 minute, the 5 minute is in that cell. And look at this. You see there's nothing here on the lower time frame. Remember, I told you that everything, I'm just pointing things out as I see them. That every chart, like 5 minute, 15, each one, the stochastic flows with that particular one. So it's, you know, you want to pay attention to that. So remember, I was like, when you're starting, you start on the 15 and you start around that 80 or that 20. But then as you advance in your skill set, that it'll be different on the other time frames. So this is a prime example. On the hour, we were way up here, but now look where we are on the 5 minute. So they're going to be different. And so just kind of throw that nugget out there as you advance in your skill set. And then that'll explain like why you're able to take a trade when it's like not even buy it. So now, as you're seeing this, right? I'm seeing this. So I didn't take this trade. And I explained to you guys that I was very okay with not taking a trade. Now, yes, you had individuals that operate and they got their 777. But look, this turned around and it pulled up, and this would have knocked you out of the trade if you would have hit your pip reaction time or what have you. And then, of course, when you turn around and you come back over here, what we already analyzed, you can see that it really went for that sell, right? You can see that. So here, absolutely not. Some of you did, but I just want to stress the point of the discipline, the consistency. Consistency is what's going to win. Perfect practice makes perfect, right? Perfect practice makes perfect. An educated trader is a profitable trader. I want you all operating because when you have that consistency, that's what's going to build your account. You don't want to like, well, I think it's going to go and bam, then it doesn't. Ultimately, this one did. Stop loss would have been here. Trust me, I already know some of you don't do it. You need to do it. It's called stop the loss. It's a stop loss. It stops the loss. So, but this one, hey, it worked out in your favor. And I'm excited that it worked out in your favor, right? I'm excited that it worked out. But we saw in that GBP NZD that it might not have necessarily worked out in your favor, even though I did see some 777s on that. And so I'm just pointing it out because I want you all operating with discipline. And just like, you know, I'm gonna give a high five because we share a name. So, but just like that, you know, it's definitely no confluence. So I stayed down and got into 30 pips later. And so basically that's phenomenal. And I have to say that, and it's not because we share a name, but I'm saying it because that's skill set development. That's what that is. That is skill set development. That is you taking the time to analyze the charts and walking through understanding what's important and how to take the trades. And so what you all also can do, because if you would have had a sell stop somewhere down there, guess what? Then it would have worked out in your favor. So after it finished that correction, it would have worked out in your favor. If it would have kept buying, then guess what? Then you would have never even entered the trade. So those market orders are important as well. So, and of course, 10 pips and cash out or to your first support and resistance line, stop loss above or below the PSAR. Other than that, when you start trading on the higher time frames, there's a little bit more. That's why we don't start there. You know, there's a little bit more analysis that you need to do. You have to understand your support and resistance lines. You must understand you must understand some market structure. You know, need to understand your trends. These are trend candles, but I need to understand my trends. So just basic, you know, price action, you know, what you learn in the academy. And then you actually can take that and voila, you are a master trader. So questions, comments, testimonies. Questions, comments, testimonies. Questions, comments, testimonies. Drop it in the chat. Drop it in the chat. Any questions, comments, testimonies, drop it in the chat. You guys are quiet tonight. Okay, so that's helped you a lot. I'm glad. Good, good, good. So that's what I want to hear, you know, and that's what I'm asking, because this is the basics. Tonight is definitely about basics. It's definitely about, you know, walking you through step by step, helping you analyze the charts, helping you understand, because I don't know about you, but I like to keep my money. Well, thank you. Definitely the icing on the cake. I appreciate that. I do. And so I'm gonna tell you now, if you guys are pushing that button, if you guys are just pushing the button, I'm gonna just drop my Cash App in the chat, and don't push that button. So push that button. Don't just push these buttons. If you're gonna make a donation to somebody you love and care about. So so let me see. Let's see here. So let me see this question. We don't use the word confused in BYOB. So I'm gonna welcome you to BYOB, but we use the word I need clarity. There's an energy behind that. So you need some clarity on the lines at the bottom determining what happens next. All right, so a little clarity on the stochastic. So looking at the stochastic, as you see the stochastic. Now, as far as determining, right here, you see that blue line cross over the red and a downward momentum. This blue line cross over the red and an upward momentum, okay? So this is momentum. So don't try to overthink it. Think about like a basketball, right? Or if you bounce it, it's gonna hit the bottom and then it's gonna come up to the top. Now this is a ball with some air in it, okay? So it's gonna come from the bottom and it's gonna come to the top, but then it's gonna have to come back down and then it's gonna come back to the top. Now, of course, when you're bouncing the ball, sometimes you don't do it well and it gives you a little bounce and then you hit it harder, it bounces all the way up and then it's gonna come back down. You know, it really didn't get a good bounce in there. And then of course, so that's really what it is. So this helps you measure the momentum in the market. And they have one on each time frame. So the higher it goes, you notice that it goes with the buys and it goes with the sales. It goes with the buys, it goes with the sales, right? And so that's what it's doing. So when we reach this area, you see this kind of, this shaded area is from like the 80 to the 20. So that's the area where you can see no matter how far I go back, right? No matter how far I go back, that's where it spends the most time. No matter what time frame I'm on, that's where it spends the most time. It's in between that 80 and that 20. Up here is when it reaches up here, it's overbought. When it reaches down here, it's oversold. Meaning that the market is testing the market, it's pushing the market, it's testing the market. So when you get up here now, granted, I said around 80. Granted, I said around 20. However, it can come all the way up here. Look, it has 100. It can reach that 100. Down here, it can reach 0. So that does not mean that it's automatically about to buy, it's automatically about to sell. This is a leading indicator. It's based off of things that are happen. It's reading the market that's actually happened and it's kind of paying it forward. It's like, it's predicting what's going to happen. So this is an example. This is an example I like, best example I like to give. So now, if I normally take the same pattern, I normally drive, think about it, you're going to the store, take your child to school, no matter what it is that you're doing. If you normally take the same route, then that's what's called predictable, right? You're predictable. So you're going to leave the neighborhood, you're going to go to the right, you're going to go to the left, whichever way you go. If I'm going to go to the grocery store, I leave my neighborhood, I go to the right, then I take a left, and I go down, and then it's on the right, okay? That's what a grocery store is. So, I'm predictable. But so that's what this is looking at what has transpired in the market and is determining. I mean, think about it. You have an iPhone. Have you put up an iPhone and you start going somewhere around the same time you normally do, and it tells you distance you should expect to arrive at such and such at this time? Has that happened to you before? Now that's for my iPhone people. Well, guess what? That's what the stochastic is. The stochastic is your iPhone telling you, you know what, this is the time, you did this at this time and this way. So guess what? This is where you're going, expect to arrive there in 15 minutes. That's what the stochastic is. It's just prediction. It's like a leading indicator. All right. And so, but then what happens that day? I say, you know what? I want to go to a different store. So I'm gonna leave my house and I'm gonna go to the left instead of the right. and then it's gonna have to recalculate. And this is that recalculation. You notice how to get halfway down and then it'll change his mind somewhere. Oh no, let me go back up and recalculate it. So it's a leading indicator, right? That's what it is. So let me see. Let me get this other question. The trend change, yes, absolutely. That is the plan. We just had that Robinhood thing that happened last week, so we really had to talk about that. So pullback or correction, a pullback is a correction. It's the same thing. They're the exact same thing. So how do you know if it's going to keep selling for a long time? You don't. That's why it takes an advanced skill set to, you know, if it's down there around at 20, the market is going to tell you. But I will tell you what will help you is understanding the market structure. You know, understanding market structure. You know, that would definitely help you is understanding market structure, being able to look left. Okay, that's what will help you. Because when you understand the market structure, we know if the market really even wouldn't really go there. So would I prefer applying pivot points to the chart or support and resistance lines? Pivot points are support and resistance lines. All right, so I do both, but pivot points are support and resistance lines. The pivot points are just the institutional level. So think about it like this, and let me see. So think about it like this. All right. So if I draw this on here, now if I come to the daily, I might need to come down. So let's see here. Let me do it this way. I'm gonna bring it down here where the market is. So if you see here, I'm on the daily, and you can see this is a support. Look at, it's a support and resistance line right here. It taps it right here. It taps it right here. It taps it. So I'm gonna actually pull up the monthly. So I want you to show you how significant this is. So if I look at the monthly, you can see that look at how little the market looks right now, right? But this is all the way back to 93 because I'm on a monthly. You see that this is a support and resistance line, okay? This is a support and resistance line. So this is that big grand scheme of things of what the market's doing. And then of course you can drill all the way down to the 5 minute. And then as you drill down, you'll have other support and resistance lines. The ones on the higher time frames are much more, you know, obviously this is where the market is going because each candle here is an actual month. So obviously these are gonna have more impact than the ones on the 5 minute. These are more significant than the ones on the 5 minute as far as what the market's doing. And that goes back to that other question of how do I know if it'll keep buying, if it'll keep selling? We need to know where the market is. The market structure, understanding where the market is going to help you. However, when I put pivot points on here, pivot points are not going to go back that far. All right, my pivots are like current conditions. You notice that they stop, right? They stop after a while. So support and resistance is the same support and resistance line as long as the market's been in existence. So this support and resistance line is the same support and resistance as long as the market's been in existence. However, when I'm looking at my pivot points, so, you know, when I'm looking at my actual pivot points, my pivot points are based on calculations on current market conditions. So that's where the pivot points. So these are institutional levels. So just kind of think about them like, I still need to know where my support and resistance lines are, right? But those are like those institutional levels. All right, guys. So when did I say it was a better? I didn't say it was a better option on trading on the time. I never said that. Never ever said that. What I said was you need to know how to trade based on the time frame you're trading on. If you're trading on the higher time frames, there's more you need to understand. So we start you on the 15 minute, okay? We start you on the 15 minute. Pull back or reversal. So let me just do this so we can transition this call. So a pullback and a correction is the same thing. When the market turns, that's basically like a trend change, or is if we're in a trend or a range. So that's basically what I just explained, you know, what somebody else said, a true trend change. That's basically the question that someone else just asked. And I said, we'll be going over that on Thursday. That's going to take a little bit more explanation and analysis to really be able to kind of show you that on the charts. So But that's a good question, the same way the true trend change was. And so that's the expectancy for what we're going to do on Thursday, based on those entry points and helping you understand when that change actually occurs. So make sure you come back Thursday as well. All right. So guys, so I think this has been a great call. You know, I like, you guys see, I like the feedback. So this has definitely been a great call. And so it's just time to transition this call now. And so, you know, bring your questions, comments, and everything to Thursday as well. But let me go ahead, and it's definitely time to transition this call. And so right now, what I want to do is I'm going to turn this call over to someone I definitely have a tremendous amount of respect for. This gentleman, he has his PhD